this is probably largely due to the fact that we had quite a lot of gamma or negative gamma. So, anytime you have very low gamma or a lot of negative gamma, just remember that like the market maker is probably already just mispricing options anyway. And you kind of run into the situation we had on the bounce where resistances don't really matter. I will say that they did have a hard time breaching like the high point of gamma. They didn't really squeeze off the out of the money calls. So in the overnight session here, we should probably stay fairly neutral into tomorrow morning's data. How do you define low gamma? Gamma exposure that is, 0 or less. So, well, I mean, I guess you could have like a little bit of positive gamma, but like, a couple billion positive. You can usually just tell relative to the next, like the following expiries. That's on that. You have the Greeks by expiration on Gamma Strike now. You should be able to see how much total or delta and gamma exposure there are every day. Anyway, we didn't close much above the expected move, so not really all that significant. I think we did get a new local high on ES very briefly, right there at the very end of the day, but that got rejected. And so far, ES still holding below the 63.7425 level, which is fairly significant upside resistance as far as this reversal is concerned. However, we still haven't retested the long-term trend. And not only did we fail to retest the long-term trend here, we're now just further from testing it here. So I'm not gonna say that that's gonna be particularly easy for bulls. And structurally, things may have just changed enough that those upside targets just don't really have enough support for bulls to push for them. This is like May through now, and yeah, kind of struggling to retest that a little bit. Well, I do think there's some lower channels there that we may have tested. Maybe not. And then yeah, obviously to the downside, losing 63.18, bearish. Even 63.57, probably a little bit bearish because that's going to push us closer to gamma neutral and erode the supportive gamma. Dollar down today, quite a bit, 54 points, but yields at the top end of the curve moving back up. Also probably aided by the fact that the 10-year auction wasn't super great. We did see a push back into the dispersion, although. And we saw that largely play out in tech, but that started to turn around into the end of the day. It wasn't a very strong push. Like it wasn't nearly as strong as the push we saw on Monday. So, and dispersion, remains above that low from Monday as well. So they haven't quite levered up as much as they did at the start of the week again. So a little bit of fear over tomorrow's data. Obviously, if it's bullish, we'll probably see them lever up a lot more. But commodities, nothing special. And precious metals, copper's up a bit. Oil down again, 64 a barrel. It's starting to get a little bit of a move up in bond volatility. Moves almost at 90. Although I would say it's probably not very significant till it gets over 100. But it is up a little bit. Maybe due to the low liquidity. Forward yield on volatility fell again today by about double, so down to negative 5%, or is it negative 2.5 yesterday? Still negative, but the bond curve turning up a little bit, which might continue to pressure some long vol demand. Carry trade leverage moved up, then back down, but still closed a little higher on the day. Skew yesterday indicated that like put demand had fallen, but maybe today approaching the highs we'll see it increase. Puts got pretty cheap today, so if we are going to get a good continuation to the downside at any point, it'll probably be off the back of puts bought today. 20 and 50 day stocks moving back up a little bit. The 50-day, 52% of stocks above their 50-day moving average. That is a bit of a reversal broadly, but most of this pump is still just tech. Only 37% of stocks above their 20-day moving average. So we're not getting a lot of breadth in this Dow, Russell, and maybe that's the problem. Why the market's struggling to move up more sharply. Still vol shorts coming in. Maybe not as aggressive as the prior day, but pretty aggressive. VIX correlation between cash VIX and VIX, cash VIX and VX falling to 75.74%. And Fed fund futures not quite pricing in where they were at the high of the week, although the January meeting is the March and June are still a little bit below their intra-week highs. I think some of that on the back of Kashkari's flip from hawkish to dovish today. I saw the 10 2-year spread pick up. That actually bear steepened 8%. And then, yeah, so we're just kind of retesting the same level we did the other day. Still like higher low, higher high. So slightly bullish trend, but still seem to be kind of stuck at the gap here. I would say next upside resistance is probably somewhere between 60 and 80. If this fails, back to the downside, 62.90 is probably the first significant level to watch to confirm a breakdown from this bounce. Doesn't flipping dovish mean the economy is weak? Yeah. He thinks that the weakness in growth and labor could be a valid cause for a rate cut, but you still have to consider inflation, which nobody wants to do because it hasn't appeared yet, and Trump really wants to get the rates cut before the inflation appears. That's why he's pushing so hard on that. Root popping, nice. There you go. Anyway, yeah, 16% so far. I will catch you guys tomorrow. I hope some of you made some money on Root, or didn't listen to me. Whatever. Later, guys.